Hello everyone, welcome to GSTZen knowledge series on annual return filing. I'm sure last week you are aware of what are the various components of the GSTR 9, how to file GSTR 9 using GSTZen. If any one of you have not attended any of our last sessions on filing of the annual returns using GSTZen, I would request you log into YouTube channel of GSTZen and attend, because GSTR 9 is a critical filing document. Once filed, you cannot revise it. There has been number of questions that has come from the participants on reporting of input tax credit. So we thought it is apt that we should discuss what could be the issues that would come up. And we have listed various issues that have come up during the course of our discussions. In case if any of your question is still not addressed, feel free to put your question in the chat and we will be taking up. Just to walk you over the agenda, we would look at basics of input tax credit and how do we report this in the GSTR 9, then the issues and resolutions. Before I start over the session, I just want to ensure that the audio and video is perfect. If yes, please put it as yes in the chat. Got it. And unfortunately, in this technology, we never know when it gets disconnected. And I am seeing just my screen, not the participant. So whenever if something is not visible, audible, just put in the chat. And if you have any questions, feel free to put it in the chat. Just in the interest of everyone, you are muted. At the appropriate time, we will make you unmute and you can ask your questions too. If we look at the annual return filing, GSTR 9 is divided into 6 parts. The details of how to fill all that we have discussed earlier. Today's discussion is on part 3, which is on input tax credit, detailing 3 tables, table 6, 7, and 8. Now, what are these table 6, 7, and 8? And what are the input tax credit aspects that we need to be knowing? Firstly, little basics of the input tax credit, like a refresher. Section 16 of the CGST Act gives an opportunity for someone to avail an input tax credit, subject to certain conditions. 16 subsection 2 has 4 conditions and 3 provisos. If they are fulfilled, one is eligible to avail the input tax credit. Having availed the input tax credit, you might have to reverse owing to common credit if something pertaining to an exempted turnovers. Or even though if it is business, there are certain blocked credits which is given in 17 subsection 5. Either apportioning of the credit that is availed or restricting the credits is listed in section 17. Section 18 deals with the special cases. Today's focus is more on section 16 and 17, reporting it of annual return. Now, what is annual return? Annual return is a statement of facts on the credits that you have availed and the credits that you have reversed. Please note, annual return is not an actionable return like GSTR 3B. In a way, you can correlate your GSTR 9 like GSTR 1, where you report something, but it would not affect your credit ledger or a liability ledger. Likewise, while filing your GSTR 9, post filing of your GSTR 9, neither your cash, credit, or liability ledger would be impacted. So you got to make sure as to what you have to report it in GSTR 9. You would only report those credits that you have availed and those credits that you have reversed. Credits that you have not availed and it is available, you will not be reporting in table 6 of GSTR 9, nor those credits which are ineligible and yet you have not reversed will not be reported here. So let's understand how we do reporting in table 6, 7, and 8. As I said, table 6 is about availment of input tax credit. Table 7 is the reversal of input tax credit, and table 8 is a reconciliation with GSTR 2A. So before we get on to the issues, we should also understand what these tables represent. You might be noticing that availed as per 3B, I have stricken. I'm only intending to look at what table 6 should report is what are the credits that have been availed. In fact, it may so happen that some might have made an error in reporting of credits in GSTR 3B. Let's look at how we report it in GSTR 3B and what the errors that could have happened. If you notice, GSTR 3B, the input tax credit is reported in table 4. It has 4 subparts. 4A deals with gross input tax credit that has been availed. 4B, out of the credit that is availed, what is the credit that has to be reversed or the credit that has been reversed? The net input tax credit one avails is reported in table 4C. So 4C details the net input tax credit one is availing. So the value that goes to the electronic credit ledger is the value which is there in table 4C. Now, you might have some purchases which are ineligible. You might have some purchases which are ineligible. So the ineligible credits are reported in 4D. So 4A is eligible credits, 4D is ineligible credits. If I have to say what are my total credits, the total credits will be in table 4A plus table 4D. So the total credits, if I have to match this with the credits that are visible in my GSTR 2A or 2B, the credits, if I have to match it, I will be looking at adding these two tables. The net credit that would be traveling to electronic credit ledger is the value that is reported in 4C. Now, for the purpose of GSTR 9 reporting, the values which are there in 3B is expected to be reported in table 6. The values which are there in 4B is expected to be reported in table 7. 6 minus 7, the net value is 7J, which we call it as 7J, will be matching ideally if there are no other credits like ITC 01, 02 or trans credit, should be matching with your net ITC available in table 7J. Now, quickly, what is the table 7J which we are talking about? Let's also look at the GSTR 9 tables. So, right side of it, what you are seeing is a correlation with GSTR 3B. The left side is the GSTR 9 tables. Though it is written in single statement, you will have to report it as CGST, SGST, IGST separately. So the total credit has to be segregated into these 3 columns. It's not a single credit that you will be reporting. The credit that you have availed, please note the credit that you have availed in GSTR 3B, which is in the form number 4A of GSTR 3B. So this is what is a gross credit, is auto-populated in your 6A. It's auto-populated in 6A. Again, you are expected to do a bifurcation of the credits between the various category. What are the various category? Forward charge purchase, reverse charge purchase, import of goods, import of service. Like reverse charge purchase is there in 6B, 6C and 6. Import of services is separately, you will be reporting in 6F. These 3 put together, these are your reverse charge purchases. Then you have import of goods, which is reported in 4A1. And the ISD credits that have come is reported in 6G. Owing to Rule 37, if you have not paid the taxes, if you have not paid the amounts to the vendor within the time, that is 180 days, you have to reverse the input tax credit. However, after the repayment, please note after the repayment, you can re-avail the credit. There is no time limit. If there are some credits that are re-availed, those re-availed credits have to be reported in 6H. Now, please note, this is a credit that has been reported and separately re-availed. Now, this along with that, there are other credits that you are likely to take. Though the current year TRAN credits are not available, I have highlighted separately in the red color just for your additional care, so that you be watchful if something has been reported here, because the government has permitted to file a corrected tran return only in a few cases, only in few cases where the government, a couple of high courts have ordered to reopen and file it. In those cases, the tran returns were permitted to be availed. Otherwise, if I have to say the total input tax credit, I am reporting into 6I. You can see 6I between 6B to 6H, the total above is the credit. That is what we are reporting. Now, as I said, we segregate into CGST, SGST, IGST. We also segregate this into input services, and capital goods. So the credits that are availed are reported in table 6, and the credits that are reversed are reported in table 7. This is a quick referencer reconciliation of the values that are in GSTR 9 vis-a-vis the values that are there in GSTR 3B. Now, any questions to anyone at this point? If you have questions, please put it in the chat. Someone says not able to get your voice. Voice not able to get. Is my voice audible or not audible? It is audible. Okay, got it. Because I can see 3 people putting in the chat not audible. Got it. No problem. Now, this is an indication. This is an indication that the credit that you have availed in GSTR 3B. So this portion is the credit that you have availed in GSTR 3B, which needs to be reported in GSTR 9. Now, if you notice carefully, I have made a statement that what needs to be reported is the input tax credit availed, but might not be exactly the same what is there in GSTR 3B. Let me give you an example. Let's say I have imported the goods. I have imported the goods to the customs. While filing my bill of entry, I have, along with my customs duty, I have discharged the IGST. Ideally, in my GSTR 3B, I should have reported in 4A1. This is the place in which I should have reported it. But instead of reporting in 4A1, I made a mistake. I reported it in 4A4. I have reported an import of goods, IGST on import of goods, in 4A5 other than instead of 4A1. Now, having reported it in 4A5, does it mean that I'll continue to report in 6B of GSTR 9, or do I have to report in 6E of GSTR 9? Ideally, it has to be reported in 6E of GSTR 9 because that is the right credit. GSTR 9, you can say it's the last opportunity for you to correct and report the right values. Now, by doing so, you are not availing a credit or reporting a credit that you have not availed or utilized. You are reporting a right credit into a right place. What you have made earlier was wrong. Like in 3B, you have made it wrong. Could I have it corrected in 3B? Could have been in the subsequent, because there is no concept of editing a return which has already been filed. Or the second situation, my input tax credit, let's say, is 100 rupees. Input tax credit is 100 rupees. By mistake, I have reported as 1000 rupees. It's a data entry error. It's common. I realized this in the next month and reversed. I realized this in the next month and reversed 900 rupees, which I have availed extra. So while reporting in my GSTR 9, do I need to report the 1000, the value of 6B? Should it be 1000 or should it be 100? This is again the common question that comes in, that I have made a mistake and I have corrected. Now, there are 2 ways to answer to it. And by the way, today's session, please note, all the answers that I'm giving can be interpreted in a multiple ways, and department could have an alternative views too. But what is the right way or a better way? Though, since there is no handbook or a document which is published by the CBSE in handling these errors. Out of the experience and out of handling so many thousands of returns, getting it filed, I'm saying out of the wisdom, what is the right way of doing to avoid notices or to have a better reconciliation. In the current scenario, one could say report 1000 in table 7, table 6 and 900 in table 7, so that the net value 7J is 100. But my answer would be, it is an erroneous report, you have identified reverse, and it is not a reversal on account of section 17. So you have to report only 100 rupees in your GSTR 9 table 6. So is this the only way? As I said, there would be multiple ways of reporting it. Yeah. So going further, the other credits that are there, basically what I am reporting is the credits that moved to electronic credit ledger. It could have moved through 3B or directly. Directly is what? By through TRAN returns or ITC01, ITC02. If you have any of such reportings, those additional reportings, you will be reporting through table 6K to 6M of GSTR 9. So broadly, these are the credits that you will be reporting it in GSTR 9. The total input tax credits would be 6B to 6H, which will be 3B, and what the other credits would be 6K to 6M. Now, how do I reconcile this? Will it be reconcilable? The answer is yes. This can also be reconcilable. Basically, if you do a summation of your electronic credit ledger, every month you are availing, you are utilizing whatever the credits that you have utilized to offset your liability, even that value plus your unused input tax credit. You can do a opening balance, closing balance, additions. You can do this reconciliation. It should also match with your net input tax credit avail. So there is one way of reconciliation. Same thing you can do in the books also. Something you would have purchased but availed in this current year, balance which you have availed in the next year, so you cannot report it in your table 6 because you have not availed. So you're carrying forward, the carried forward value is reported to table 13. It could so happen that something of the previous year has been used, or you have found that it is an ineligible and you have reversed it in the subsequent periods. So you got to eliminate the credits that are reversed in the subsequent period. So these are the kind of adjustments you should also do to reconcile. So there are multifaceted reconciliations one has to do to match what is the proper input tax credit one has availed or one has to avail. And friends, I am not focusing on the GSTR 9 basics because basically we have to look at the issues. So I'm just quickly walking you through what are the things that are there in GSTR 9. Then comes broad understanding of my input tax credit that I have to report in the financial year 2020-21. In case if it has been availed in the same year, so I have purchased in 2021 and I have availed in 2021, I'll be reporting it in table 6. But I have availed it in 21-22, then I'll be reporting it in table 13. Table 13 is only like for your information. Likewise, if I have reversed because common credit, ineligible credit, whatever be the reason, if I have reversed, again, please carefully watch the words, if I have availed or if I have reversed. If I have reversed in the same financial year, which is 2021, then I'll be reporting in table 7. If I'm not reversed in the current year, and if I have reversed in the next year, then I'll be reporting in table 12, which is of the subsequent year adjustment and reporting. Please note, table 13 and table 12 has no relevance in terms of your computation or the credit available. Again, this is like for your information. By the way, we have a notification which gave an exemption in terms of reporting to table 13 and 12. I would personally suggest, even though there are exemptions in reporting, one has to report all the numbers so that you get a clarity of what has been reported. Now, you might be wondering that, okay, can I make a mistakes, or is there a way that if a mistake has happened, can it be detected by the system? So please pay attention to this slide, that how an error can be detected. Assuming I have availed an input tax credit of 100 rupees, and I am now reporting either as 50, 70, 120, whatever be the number in GSTR 9. I am reporting a figure other than what I have availed. It could be higher or lower. Now, where can I report? As we have seen, the reporting tables are between 6B to 6M. Like only in you, the level playing field is only those. You have to forcibly segregate into those. Let's look at what would be the issues that would happen if you report it into 6B or 6H. Now, while reporting it into 6B, there is a counterparty who has filed their GSTR1. You have excess or short reported, then it would not be there in GSTR1, so it will be a mismatch with the 2A. Okay, let's say you will fit it into RCM tables. What are the RCM tables? 6C, 6D, purchases from an unregistered dealer or a registered dealer, which is for notification 13/2017 central tax, or 4/2017 for goods, or import of services. I will be reporting in either of this 6C, 6D, 6F. Now, to avail an input tax credit on account of reverse charge, I should have discharged the tax. So the taxes would have been or should have been paid. So it should have been reported in 4G. So if that is not mismatch, again, GSTN can easily trigger a notice. In case of imports, imports are reported in 6E. And friends, as you are aware, today the imported values are reported in 2A. And not that, even though that was introduced in very recently, but this data is now available starting from financial year 2017, July 2017 onwards, this is available. So one has to make sure that the data is matching with the ICE gate. So ICE gate would be showing this value. And in case if the 2A is not, this item is not visible in 2A, the common question that I get. In the user services, there is an option to search BOE, bill of entry. Please enter the bill of entry number. It will fetch from the IceGate portal and update your GSTR 2A. In case if you report it in 6G, that is an ISD credit. So your own ISD should have reported it. So again, ISD credits are visible in 2A. So you should be able to see that these credits are available. If you are putting it into 6K to 6L, like these are a direct credits to electronic credit ledger. So you should have filed a TRAN return or ITC 0102. So you cannot technically force fit your credits into any of this unless otherwise there is a genuine. Now, if you are correctly reporting it, then the genuinity of it can be checked. So there could be two errors. You are reporting a wrong number that can be easily detected. If you are reporting a correct number, then what we are focusing is whether the reported item is genuine or not. That is what would be checked. Now, how do we match it with the credit that I have availed? So the credit that I have availed in this year, anyhow, there will not be any credits of TRAN, or if a very rare case, we will have ITC 0102. Ideally, the value which is there, the 4C, the net input tax credit, which is as per GSTR 3B. Ideally, this is the value, the 4C of GSTR 3B should be matching with the gross value, which is 6B to 6H, and the 7I, which is reversals. So the total value we report it under 7J of GSTR 9. So 7J of GSTR 9 should be matching with 6B to 6H. The total is 6I, which we have seen in the earlier slide. So 6I minus 7I should be equal to 7J. This is another check one has to do before filing your GSTR 9. Couple of items, additional care before we go to Q&A is with regards to reverse charge liability. The liability is disclosed in 4G and the credit is availed. If the credit pertains to an unregistered dealer, it will be reported in 6C. If the credit is pertaining to a registered dealer, how do you know which is registered dealer and unregistered dealer? In your GSTR 2A, when you see the line-wise entry, you will find a filter called is reverse charge. If the reverse charge is yes, that means the registered dealer has reported to it, because registered dealer will be reporting it in his GSTR1 under table 4B, stating that I have made a supply, but that supply is reverse charge, recipient will be paying it. Then import of services, even though there is a separate reporting table for it in GSTR 3B and GSTR 9, payment of taxes will be treated as a reverse charge and you will be paying it. So the liability for 4G should be matching with these three summation. There are some situations where the recipient or the taxpayer pays the taxes in this month, avails the input tax credit in subsequent month. In such a scenario, you need to have an additional reconciliation that there is something carried forward from the previous year, carried forward from the current period. You need to have all these reconciliations before you file your GSTR 9. That is where again GSTZen, while you are filing the return, last week we have seen that there is a validation. So before I hit the submit button, in the GSTZen, that validator will check all these conditions and say whether the return is valid and all points have been taken care or not. Likewise, in case of the credits which are pertaining to the reverse charge liability, segregation between RCM, segregation between registered and unregistered, I would say please use GSTR 2A as the source, because books of accounts you wouldn't have kept a track because you have voluntarily paid the taxes by yourself. Take the GSTR 2A and look at the values from there and report it. All right, moving on to credits that you have reversed. So moving on to the credits that you have reversed. Reversal of the credits are reported in table 7. You will reverse credit owing to multiple reasons. A, you have not paid to the supplier within the time, so you have reversed it. And please note, you will be reporting the credits if and only if you have reversed in your GSTR 3B, you will be reporting here. If you have not reversed the credit, you will not be reporting here. GSTR 9 is not a placeholder to report what ought to have been availed or what ought to have been reversed. GSTR 9 cannot handle that. So you will be reporting only those credits that you have reversed. Now, what are the credits? If the payment on account of non-payment to vendor, you will be reporting under 7A. If ISD has excess transfer to you and reversed issuing by a credit note, it will go to 7B. Common input tax credit or common input services, input goods and input services, you will be reporting under 7C, which is rule 42 commonly called. And if it is towards capital goods, you will be reporting it under rule 43. A blocked credit, a credit that you have availed and subsequently you have realized that it is a blocked credit and you have reversed it. This is again a common mistake that people do. If you have reported under 4D of GSTR 3B, then you will not report in 7. 7 is only out of 4B. Please note, 7 is only out of 4B. A blocked credit, if you have not availed itself, then it will not enter. If you have availed and reversed because it is blocked, or at the time of availment it was valid but later it became blocked, either it could be used for personal consumption or the goods have been lost, stolen. In these cases, you will be reversing the input tax credit. Then any other reversals, maybe on account of rule 38, rule 44, all these cases, you will be reporting it under 7H, and 7I indicates the total reversals. What is more key for you to validate is 7J, which talks about how much is the net ITC that you have used for or utilized. Like how we have summarized table 6 on input tax credit, let's summarize table 7 on reversals. So in terms of reversals of input tax credit, if you have reversed the input tax credit in the same financial year and it is permitted, so you will be able to report it in your table 7. However, if you have not reversed or you want to reverse it after September, please note section 39, which is talking about returns. You cannot correct anything after the September filing return. If you want to correct it, you have to correct it only through DRC03. Now, assuming you did not even correct, then you want to correct it now, you can still correct it in GSTR 9. You may ask that sometime back you have said you cannot use GSTR 9 for the credits that have not been availed or credits that have not been reversed. Yes, I still go to the same point. All that I am saying is you can raise a DRC03. You can make the payment of taxes through DRC03. DRC is a demand recovery challenge. So using DRC03, there is an option called annual return. So pay through DRC03, selecting option called annual return, select the correct financial year 2021, and then report it in your table 7. So in table 7, what you are doing is you are reporting a credit which is actually reversed. Now, there are many situations that I have purchased, availed the credit, later realized these goods are not good quality. I have returned the goods. So it is like purchase returns. The credit that I have availed, I have to reduce. Instead of reversing input tax credit in GSTR 3B, these are shown as additional output tax liability. It is actually wrong. You cannot show it as an output tax liability. So if something of that has happened, the right way to do is you claim the excess taxes paid and file a DRC03 for the liability that you need to discharge for the input tax credit. So you got to give a reason. So there are people who ask, okay, I did not do, and at this point I do not want to do. How do we do it? There are ways to it. In the question and answer session issues, I'll be explaining that. Okay, so it's 3:30. So I intend to complete this in another max 5 minutes and we'll go to the Q&A. Now, having understood on the ITC reversals, to summarize the legal position for the ITC reversals, up to September of next financial year, it is permitted. After September, either availment or reversal is not restricted, technically not permitted through 3B, but there are people who would do. You have a it is basically litigated or litigative view cannot be handled it. If you have not availed, you cannot avail it after September. You have not reversed, you have to reverse it through DRC03. Then comes to the last table, table 8. Yeah, okay. Before table 8, there are certain notes to table 7. Again, highlights. Please exclude the values that are there in 4D. So 4D, it did not participate into input tax credit. There is a mistake people do, report in 4D and also report in 7. Do not do that. If you have not reversed in 3B, do not report it here. If you have reversed in the subsequent period, report it into the subsequent annual return, but not in this annual return. In this annual return, you will report it into table 12, saying that this is reversed in the subsequent period. And if there are reversals which are done in 4B, you include it, no problem. And there would be a reasons for mismatch. That reasons you have to explain why there are mismatches happen. Sometimes mismatches will happen in a genuine case. I have listed some of the questions. We will see those cases. Coming to now table 8, the last part of our discussion before we move to Q&A. Table 8 talks about input tax credit reconciliation 2A versus 3B. All this while, as the taxpayer, we used to do a reconciliation of 3B versus 2A. Now, you may wonder, is there a difference between 2A versus 3B and 3B versus 2A? Of course, yes. The context with which we do the reconciliation. While you are doing a reconciliation 3B versus 2A, the focus is I have made these purchases that the vendor has uploaded it or not. You will only keep looking for those credits that are missing. But the government context, while for looking 2A versus 3B, is There are line items which are there in GSTR 2A. You as a taxpayer, have you availed it or not? If you have not availed it, why you have not availed it? Let me give you a pictorial example. Let's say your total credits are 200 rupees. And I have segregated into two categories. 120 is eligible and reported. 80 either not eligible, not reported. 80 is not eligible, not reported. So the explanation to table 8 will be all the line items of the credits. Now, what is eligible and reported? Now, only those reported would be coming here. That is 120. That is 120 will be coming here. How does it come? Let's say of 120, I have availed in GSTR 3B, then it comes to 8B. If I have availed ineligible credit, though it is wrong, which has to go to table 7, even though I have availed ineligible credit, though I said let's look at eligible, but it is an ineligible credit, then I will be reporting it in 8B again, even though it is ineligible because I have availed it. Next, if I have availed, but I have availed in the next period, so it is there in the 3B, it is there in the 2 year of the current year, but it is there in 3B of next year, then you will report it in your 8C. Basically, you are coming to a reconciliation. If certain things did not, it is eligible but did not get reported, then it is like a lapse. It is like a lapse credit that you report in your 8D. Those credits which you have not reported, those credits that you have not reported, why did you not report? Either it is eligible, ineligible, you missed it, you forgot to take the credit, or it is ineligible and you forgot to take the credit. You segregate into two categories and report it. The point here is all the items that are visible in 2A has to be attended to. All the items which are there in 2A has to be attended to. Now you will have this valid question, sir, my 2A and 8A is itself not matching. Again, I would say, please download a reconciliation to the statement that is there in GSTZen, where the 2A versus 8A reconciliation is there, which will also indicate why a line item that is present in 2A and not present in 8A. Either the supplier has belatedly uploaded, or is it a reverse charge item? Sometimes it could be an amended invoice. Original invoice was 100 but amended to 40. So 8A will be showing 40 only. But in 2A, you will be seeing the original line and the amendment line also. So you need to really know how do you construct what is the values that have to come to 8A. In other words, from the government perspective, these are only the lines that you are eligible for availing the credit and you are explaining here. In case if you have availed an extra credit, your 8D will be showing negative. If you have availed a short credit, 8D will show a positive number. Whether positive or a negative, you need to have reconciliation. If it is a positive number, it would say that so much is going to be lapse. It would say so much is going to be a lapse credit. All right. So part 5 is a common question that there is an input tax credit reporting in my part 5. Now, does this mean that I have to pay the taxes of part 5 here? The answer is no. Those two tables, table 13 and table 12, I'll show you back the same slide. The table 13 and table 12, these are only for your information. It is not going to participate or affect in anywhere. They are just an information that something which I have availed in next year or something which I have reversed in next year. And please note, if you have not availed or reversed, you will not be reporting in this table. So friends, these are the points that have to be known, that one has to be aware for reporting of input tax credit. Let's look at a couple of questions and answers from the participants at this point before I list out my questions that are there. And friends, this session would get a little extended by 15 minutes looking at the questions. Question by Ashish Kumar. If there is any difference between credit availed and books, for example, there is a credit note which was not reversed in 3B. How do I disclose? So Ashish, you have in the books, it is showing 80 rupees, but in 3B, you have availed 100 rupees. In GSTR 9, you should show 100 because you have availed it. If you now want to reverse that 20, you report it in table 7 and pay it through DRC03 annual return. And there's a question from Bharati. Input under RCM on fees paid to advocate is 80,000 rupees at 18% tax. For in financial year 2021, it has not been paid. No RCM is claimed in 2021. Should we pay it in GSTR 99C? Where to show in which column? How to pay? Will we get in the input tax in the current year? Can we pay with this simple challan? Bharati, couple of this question is anyhow detailed in my Q&A also. The couple of points to note is the missed out liabilities can be paid till September of the next financial year. If you have paid it in the next financial year, for RCM, in the month of July 2018, there was a clarification given by the CBIC. RCM report it in the year in which you have paid it instead of the regular year. So in a normal case, the liability would have come to table 10 if it was a forward charge liability, but only because it is the RCM you have paid and availed next year, it would be coming in the next year. But if you have not done through 3B, then you can do it through DRC03. Now the question comes is, having paid, will I get the input tax credit? It would be highly doubtful. So 16 subsection 4 restricts the time limit within which you have to avail the credit, and that has lapsed. Then question from Sean, if I have purchased a computer for office, can I avail the ITC or does it come under rule 42? Somebody explained me that the goods that are used as if I'm end user, it comes under rule 42 and I cannot avail the credit. Sean, the rule 42 is about goods, and what you have purchased is a capital item. You have to look for rule 43. Question for you to avail the input tax credit is to first answer whether the laptop is for personal use or the office use. You have anyhow said it is for office. So I'm presuming it's for business use. Anything purchased for business, including like this water bottle which I'm using for drinking water, you are eligible to avail the input tax credit. Though I'm in the business of audit and accounting and assurance services, water bottle has no connection in my supplies. Even though since it is from a business, I can avail the input tax credit. All right. So there are some other questions which I have listed and which have come up in various cases. Now, I have availed an input tax credit as CGST and SGST while it is IGST. So my total purchases, let's say input tax credit, I have only interstate purchases. I should have ideally reported my IGST has say 100 rupees. Instead of reporting IGST as 100 rupees, I have reported CGST as 50 rupees and SGST also as 50 rupees. So technically I have availed input tax credit of 100. There's no difference. But there is an interchange that has happened between CGST, SGST and IGST. And it could have been vice versa. This is a common mistake that happens. Now, how do I correct it and report? Again, I cannot give a straight answer to it. First, let me start with if you have made a correction or how do I do correct it. I am starting with if it is corrected in subsequent period. So how do I correct it? The correct way is show the actual credit that is availed in 3B and the wrong credit that you have reversed subsequently in 12 and the right credit that you have availed in 13. Now, let's say you did not do this. You did not do this. Now, you don't want to also get into a risk and you want to pay off to the government. So you will be reporting whatever you have availed, you will be reporting in 3B and it's already reported. The same thing you will report in table 6. Since you want to pay it off, you will be reporting in DRC03. You make the payment and report it in table 7. Generally, this is not a feasible solution if the quantum of credit is high. You would want to say, no, I have not excess availed. I have availed it rightly only. It's just that I have put it into a wrong column. So I did not make a mistake. So I would suggest you should report it in this fashion. And what's the right way? In your GSTR 9 table 6, you have 3 columns: IGST, CGST, SGST. What you have done, you have shown 50 CGST, 50 SGST in 3B, but actually it is 100 IGST. Instead of reporting 50 and 50 in C pluses, report it as 100 in IGST. In GSTR 9 table 6, what would then happen? Your 6I, which is the total, will be showing 0 and 0 for CGST, SGST, and 100 for your IGST. But what is the populated from the department portal, which is 6A, would be showing 50 CGST, 50 SGST, 0 IGST. So 6A minus 6I, which is 6J, the difference will say minus 50 CGST, minus 50 SGST, plus 100 IGST. The net, if you impact, it is 0. However, your 6J, ideally, which should have been 0, it is now not 0. That is where in my earlier slide I said there would be scenarios where your 6J will also not be 0. There should be a check you should do. Ideally, 6J should be 0 to check you have not reported an extra credit or reversed an extra credit. So the better way or right way of reporting is the correct credit which you should have taken. Like how you are correcting an import of goods which was otherwise reported in 4A5 is now reported to 6E of GSTR 9. Likewise, your IGST and CGST split is also a correct way of reporting. You are doing it. Now, will it be questionable? Again, yes, but SSA has to explain during the assessment that this is what happened. There is no revenue loss. The revenue has been promptly paid and taxes have been paid. There is no issue. The next question that comes up is, I have taken an ineligible ITC, but I have not reversed it till date. Can I now report it in GSTR 9? By now you would be clear to it. The answer is no. Answer is no. If you have not reversed it in GSTR 3B, you cannot report it in GSTR 9. But yet, this is the last return. Annual return is my final return. Right disclosure of the taxes that needs to be paid. Then please pay it through DRC03. You are permitted to do it. Report it through DRC03 and please not pay it along with interest. And there is an instruction that has been given while reporting DRC03 annual return, the taxes should be paid using electronic credit ledger, not electronic cash ledger only, and not electronic credit ledger. So you can pay through DRC03 and report it into table 7, right? So this is the way of doing it. There's a next question. What to do when the credit has been availed on the basis of my purchase invoice? And this is not visible. This invoice is not visible in 2A till date. This is not visible in 2A till date. So what do I do? So I'll come to a situation where it is visible also. Now, the answer is, it is a litigative subject, section 16, certain conditions you have fulfilled. Now you may say, sir, supplier has reported in B2C, all those things. In my view, 36 sub rule 4 gives you a leeway to claim additional 5%. If you are well within that, you can still avail it and claim the credit. Section 155 of the Act wants you to prove what is the credit that you have availed. Are you genuine holder of that credit? Now, you might have issue with the officer, but when you go to a higher forums, the principles of natural justice will be looked in. There are many case laws favoring the SSS, which are from either tribunal or the high court. So one can definitely, even though a litigative position, one can definitely fight for it and get the credit of it. The next question, those similar to it. Now, this credit which has been availed on the basis of the purchase invoice, it is visible in 2A, but it is not visible in 8A. It is there in 2A when I downloaded, but it is not there in 8A. Why? I have told you That 8A is computed basis the September data. If your GSTR 1 has been filed after the September, it will not be visible in 8A. Again, your 8D will be showing negative, saying that you have excess availed. Nothing to worry. Even though you have availed a credit which is not there in 8A, you can always justify saying that supplier has filed the return belatedly. You are still eligible for this credit and you can avail this input tax credit. The way you have to report is have a reconciliation for the values that are coming 8D. 8D will be showing that, okay, a negative value saying that you have availed extra. Let's say 8A is 0, but 8B is showing 100 rupees. 8D will say negative 100, indicating that you have availed extra. So nothing to worry. This has been taken care. So you will say that a copy of reconciliation, the 2A screenshot. All right. The next thing, though, which we have already discussed, that I have made a wrong reporting under 3B. Import of goods reported as all other credit. RCM paid is reported as also all other credits. All these mismatches happened. 3B, I didn't know. My accountant did not know. I have to pay 100 rupees. I paid, but I paid and reported in a wrong head. Please pay attention. And this is where I will say, even though you use internal tools or something to file your returns, internal resources to file your return, while filing your annual return, it is a last opportunity. Use a software. And again, GSTZen has a beautiful way of working how to use it. In the last 2 demos, I have explained you how it can detect the errors. You can use that and do it. Point number 2, please take an advice of a consultant. Like how everyone advises, once in a year, you have to go and get your health check done, insurance done. Even your annual return is something like that. You might have assumed everything and you have done it. During the year, so many notifications have come, law has changed various things. A consultant, an external review, once it is done, if he says, looks, everything is okay, and that satisfaction that gives you is more worth than always thinking that did I do something wrong. Now, everything comes with a cost. There's nothing, no free meal in this world. So even though that is the cost, like that's the insurance amount you are paying to ensure that you are avoiding litigation. The cost of litigation today is all the notices by the department would be issued under section 74 and the penalty is equivalent to the tax and rate of interest is 24%. Is it worth if a business has missed out, say 10,000, 20,000, the demand is 20,000, penalty is 20,000, notice is happening after 3 years, 24% into 3 years, which is 75%, is another 50,000. For a 20,000 item, you are end up paying 55,000 rupees. So better be careful while filing your annual return. Get an external review done. Get a consultant done saying that, look, everything I have done, is everything okay or not? All right. So here is the same question that you have made error in 3B. Can I correct it? The answer is yes. You can correct it. Please report it properly while filing your GSTR 9. Next, the ITC on the credit note to be reported in table 4B, or should it be reduced in 4A? Now you may say that this is a question of GSTR 3B. Why in annual return? Irrespective of your treatment, however you do, how do you report in your annual return matters. Why does it matter? Now, ideally, basis the advisory note of GSTR 2B expects that the credit note reversals to be reported in 4B. Why? Because GSTR 3B, you cannot have negative numbers. Assuming in that month, you do not have a credit. How do I reduce my input tax credit? That is where they have designed it to be putting into 4B so that you can automatically reverse and create a liability. My suggestion always is to net it off and take a net input tax credit. For the accounting purposes, you want to have a control, you want to report in 4B, perfectly fine, absolutely no issue, report it in 4B, even that is fine, no problem. However, it can be netted off with 4B. But when it comes to your GSTR 9 reporting, and listen this carefully, when it comes to your GSTR 9 reporting, please net it off and report it in table 6. Even though you can report it in 4B for the purpose of 3B, but for the purpose of R9, I would advise it to be reported in table 6. Why so? Because table 7 is anyhow there. There is no specific head for a reversal of this credit note in table 7. You may say, sir, there is all other ITC, I'll report it here. Perfect, no issue, you can go ahead and do it. See, we all know there's a difference between 2A and 3B. And there are enough reconciliation items. On top of these enough reconciliation items, there is one more reconciliation item is going to come, which is this credit note reversals. Very difficult for it to explain to the officer. How will this come as a reconciliation item? Let me explain you. Table 8A of GSTR 9 is the net of input tax credit. Don't expect your table 8A is giving you gross value. It is giving you a net value. And that net value is compared with what? It is compared with the gross value. Your 8A is compared with 8B. The source of 8B is 6B. And most of you, if you're wondering what are these numbers which I'm saying, and first time you are filing your annual returns, please pardon me. This video is anyhow there on the YouTube, so you can always pause it, correlate with the respective tables, because it is very essential. Those who are filing your annual returns, very essential you remember those table numbers. So 8B value is originated from 6B, and 6B is if you are reporting a gross value, while your 8A is a lower value because it is net of credit note. 8D will show a negative value. The moment 8D is a negative value, system alert goes up and system thinks that you have availed a credit beyond what you are eligible for, and you'll get a notice. Now, there are two ways of dealing with the notice. When you will say that when notice comes, I'll see. But tell me how many SSCs are comfortable to receive notices. Of course, it's another story that 10 years you are in the business, don't expect a notice to come. Notice is only seeking information or a clarification. But isn't it worth avoiding some notices if possible, and which are at least system generated? I think that is the another way of another approach of thinking to it. So please make sure you report it net of input tax credit. Then the input tax credits pertaining to a blocked credit or input tax credits pertaining to a place of supply which is not your state. I am here, Bangalore, state of Karnataka, have traveled for an official trip to Bombay last year, and I have stayed in a hotel, and that is for business purpose. Hotel has charged me CGST, SGST of Maharashtra. Invoice has been issued in my firm name. The invoice is in my firm name, but it has been issued in the state of Maharashtra. Now, what do I do? Ideally, these credits are not eligible. These credits are not eligible. You should not avail these input tax credit. Now, let's see how does it report. By the way you report is 4D. And is it there in your GSTR 2A? Answer is yes. It will be there in GSTR 2A. However, it will not be there in your 8A. It will not be visible in your table 8A. Table 8A will only take those eligible credits. If you still have not reversed it, you can now reverse it by paying it through DRC03, pay it electronic cash ledger, pay along with the interest, and enter it into table 7 of GSTR 9. Next question. Reversal of input tax credit is on account of non-payment to the vendor. It's on account of non-payment to the vendor. Reversal happened and I have re-availed it. Now multiple situations, re-availed in the same year, re-availed in the subsequent year. The question comes is, how should I report it? Please note, we have two tables, 6H. We have two tables, 6H and 6B. Okay. If it is reversed, ideally reversal should be in 7A. Ideally reversal in 7A. I have told certain reversals you can net it off with table 6, but this reversal you cannot net it off with table 6. You report in 6B, report in 7A. report it in 6B, report it in 7A, net input tax credit is matched. That is scenario 1. Now, scenario 2 is I am reclaiming it. 4 years later, 5 years later, I have paid to the vendor. Now I am eligible to claim. When you are eligible to claim, please report in 6H and not in 6B. Please report in 6H and not in 6B, because you can explain your 8A is the credits for this year. 8A is the credits for this year. 8B is also credits for the years. 8B comes from 6B. If there is a difference, you can say 6H is also considered as a negative credit. It is pertaining to the earlier periods. So you can always explain it. So make sure you report it in 6H. Now people may think that, okay, input tax credit is a small subject, so easy to handle it. But yes, there are complications that one needs to know. The next question, in fact, I should appreciate Bharti for putting up all these questions and this presentation for easy consumption. The liability reversal on account of sales return. I have made a sale, let's say 100 rupees and 18 rupees tax, and my customer returned me the goods. Ideally, I should be availing it as a reduction in liability in the next period. But I have reported as input tax credit in GSTR 3B. How do I report it? How do I deal with? Like earlier, we have seen purchase return paid liability. Now the sales return, I have paid it as tax. You got to do a proper reporting in GSTR 9. Table 4. Table 4 talks about liability. The sales return, you net it off, reduce it in your table 4. So the liability will be a lower figure. Table 9 payable will be a lower figure. In table 6 also show a lower figure. In table 6 also show a lower figure, because you have not availed the utilized the input tax credit. Your 6J will show a difference to that extent. Equivalent to the difference of 6J, in table 9, the tax payable column versus tax paid column will show a difference. Tax paid will be showing a higher value than the tax payable value. Now, is this a right way of presentation? The answer is, to the extent possible in the given permutation combination, this is the best you can do. What is the best way is, this credit was not belonging to you, you have to avail it. So just reverse it through DRC 03 if you want to avoid litigation. But if you think that the amount is substantial, the error is made by the accountant, and you have passed on the time which you have to correct it, so you want to deal within the litigation, then you can always say, my actual liability is 80 rupees and now I'm reporting 80 rupees, but the tax paid was showing 100 rupees, and those adjustments you can easily do it through GSTR 9, but yet you will still get a notice for it by a system generated. However, the net input tax credit and net liability is matching. So in 3B, it was 100 rupees liability and 100 rupees credit. But in the 9, you will be showing 80 rupees liability and 80 rupees credit. A lower value you are showing and you are trying to justify. Is it the right way? The answer is, among the best possible situations. If you don't intend to pay the taxes again, this is the right way of reporting of the credits. We have almost come to the end. There are only some 4 or 5 questions. So let's quickly walk through. Oh no, there are 10 more questions. Okay. All right. So the next question is with regards to, there are figures, certain figures present in 8A, but are accounted in the books only next year. How do I report it in 13 and 8C? It is clashing with the 12C of 9C. Now, in 2A, please note, in 2A, line item is there. In 2A, line item is there. I have availed, answer is no. I will report it under 8C. And I will also report it under 13. But when it comes to my 9C, I also have a similar kind of reconciliation. I didn't even make a purchase. So I will not report it under 12C. See that there should be a correlation with the opening and the closing balance. Since it is not there in my books of accounts, so I start with the credit that is there in the books of accounts. Since it is not there, So 12A will not be having a value. So 12C cannot have a value. So there will be a difference between 12C and 13 also. So 8C and 13C is concerned with the ITC of the current year claimed in the next year. So it's a statement of the fact whether or not it is accounted. So please note, in GSTR 9 you are reporting it whether or not it is accounted, but 9C table 12 you will only be reporting when it is accounted. So to that extent you will have a difference between 9C and this. Then I have received money for advances and I have cancelled it. Now you may say cancellation of advances has got nothing to do with the input tax credit. Unfortunately, these things are also being reported in input tax credit because my output liability is not there to offset. So where do? I report it. But the right way of doing it is whenever you are cancelling a liability, you have to issue a refund voucher. Please note, you have to issue a refund voucher and you have to close it. You cannot report it through input tax credit. If you have reported, there's no choice. You have to pay an additional taxes now because you cannot avail that as an input tax credit, which is not an input tax credit. The next question is cancellation of tax has been adjusted in output instead of applying for refund. What should I do now? It's like the same thing, the sales credit note or the purchase credit note. These are the common things which have been always been done. So when these adjustments have been done, and in this case, my purchase returns, I have shown it as an output adjustment instead of taking the ITC reversal or vice versa. So first and foremost, credit notes have to be issued within the time limit. Even though these are revenue neutral, where output tax liability and input tax credit, you have to always report it into the right head. And it would become revenue neutral only if you are 100% eligible. So I would always say as a safeguard, you please pay the tax now. You please pay the taxes now for availing excess input tax credit. Claim a refund of the excess taxes that have been paid. Claim a refund of excess taxes that have been paid. And basis for excess taxes that have paid, GSTR 9 table 9, which shows that you have payable is 100 but you have paid 120. So now in the DRC 03 you discharge that 20 rupees extra input tax credit that you have availed. Easiest, and I would say that is the safest way of doing a transaction. If I have paid a RCM liability in the subsequent years, what do I do? Now RCM, as I have said, that as per the government advisory and in my personal opinion, because to match table 10 with the subsequent years is very difficult. So the year in which you are paying it, please report. When I say year, the maximum time is September of next year. So only when it is paid in that year, please report it and claim it. The IGST has been paid on imports in the current year, but I have availed in the next year. So in 2A it is visible, but in 3B I have not taken. I have taken it in the next year. How do I report it and how do I handle it in table 8? Because the 8H, it is showing as lapse. It is showing as lapse. So I would say report it in the year of claim, and the advisory also said that table 8 lapse will not be considered. Table 8 lapse will not be considered. So have a reconciliation for your internal records. So report it the year in which you have claimed in 6E and 8H. And in year of payment 8G, there's an alternative view. 8G also report it in the year in which you have claimed, so that there is no intimation of the lapse credit. I endorse both the views. And what will be the one which will save no notice? Because it's always, okay, how do I avoid the notice? The year in which you have claimed, report it in your 8G also. But however, there's a 2A has a different date, 8G has a different date. As long as you have a reconciliation that is explainable, Even there is 1 crore deviation, nothing to worry. If there is no reconciliation that is explainable, even there is a 1 lakh difference, you have to be worried about. That is where I always suggest use and softwares like GSTZen, which will easily consume the data, read the data from your books of accounts, or you can upload it from Excel or other sources, will come as a rescue to do this reconciliation handy. And how to report reclaimed bill of entry credit pertaining to the prior periods. So for the in terms of input tax credit pertaining to bill of credit, there is no time limit. That is not applicable. So you can take it in the subsequent year. Then are there any additional documents that is required now since that 9C is not certified? Even though 9C is not certified, the option to submit the additional document. What is the additional document? Table 8 reconciliation. Reconciliation between 2A versus reconciliation between 2A versus 3B can be still uploaded by the SSE. Next, ITC is visible in 2A but not accounted and claimed. Is that available to carry forward? The answer is yes. However, you cannot report it in table 6, report it in table 13 and 8C. Reporting of amounts in the correct head is possible, is very important. In the books of accounts, it is only at one place. So if you're reconciling with the books of accounts, to 6, you add 13. If you're reconciling with 3B, then you have to reconcile only 6 and 3B. So with what you are reconciling also matters. The answer is credits can be claimed, but you cannot report additionally in 9 if it is not claimed in 3B. The reporting of a reclaimed input tax credit, which is 6B versus 6H. In 12B of 9C, this is reconciliation with the books, and 8C of 9, it is reconciliation with the GSTR 9. So whenever a credit is reclaimed, I would always say, please report it in 6H only. Please report it in 6H only, because your 8A is as per 2A. In the current year 2A, it is not there, but it is the 2A of the earlier periods. How do you justify? When you report it in 6H, you can say that I have availed a credit that is of the previous financial year. Next, should reversal of excess input tax claimed through DRC 03, can it be reported through annual return? This is also a question people ask, that can I report the reversal of the additional credit that I have availed? Can I report it in the annual return? The answer is yes. Yes, you can always report the additional reversal that you have done through GSTR 9 annual return in table 7. That is 7H. The next question is, if reversal is under rule 37, 42, 43 is not made in 3B, can it be done in 9? The answer is the same. Yes, it can be done. Report it into the respective heads, and you can report it in the table 7, provided you are paying through annual return. Provided you are paying through the annual return. So you have to report it after paying through the annual return. You have to report in the right table, but that is 7A, 7C, 7D. You have to report these reversals in the right tables. Okay. The next question we have is, credit that needs to be reversed under table 4B of GSTR 3B is shown as a reduction in 4A5 of 3B. How do I treat with the GSTR 9? You want to now establish that you have reversed for rule 42, 43, all those credits. How do you establish? Again, this is possible. Gross up your table 6. Gross up your table 6. Show the gross credit. Reduce that reversal in 7C or 7D. So that in 8B, we will get the gross value and it can match with your 8A. So this kind of matching is very much important. Next, ISD credit is passed including eligible and ineligible, how do I report it in GSTR 3B and GSTR 9? In ISD credit, when you get eligible and ineligible, eligible credit only has to be reported in 4A3. Only eligible has to be reported in 6G of GSTR 9. Ineligible, you should not be reporting these credits. In fact, I didn't realize that Bharti has compiled so many questions, right? It's good to see these many questions. It's kind of a feast on different aspects, even though there are questions which are there in the chat we have considered. Let's see if there are any other questions in the chat. Ashish is asking, can you explain IGST ITC wrongly claimed as CGST SGST? We have claimed IGST in September 21. Now we have to reverse the CGST SGST. Which column it should be shown, and when we pay in DRC03. Okay, Ashish, couple of things. So you want to pay the taxes that you have availed wrongly. If you have availed as CGST SGST, which you think that it is not a right credit, you are now wanting to reverse that input tax credit. In your DRC03, you will pay it as CGST SGST and reverse it. So that's the right way of doing. Some of the people says that this quantum is sufficiently higher and I don't want to take the risk of reversal. So what I was saying is, in your table 6B, put it into the appropriate heads and show it. 8A is not matching with the 2A. Question from Naveen, whether my right to avail 2A will still withstand. Naveen, I would say download the GSTZen 8A versus 2A reconciliation report. It will say whether it was eligible and you have not taken. So you will be able to get an access to that information. Any other questions to any participants? Okay. So there seems no other question. And do subscribe to the GSTZen YouTube channel. This session is recorded into the YouTube of GSTZen. And for people who have not into GSTZen, not used the application, you have an option to explore it, file GSTR 9 using GSTZen. And there is, if you have subscribed to the session, this you will get a session link, and you can you'll get one free access for filing GSTR 9. You can file freely, explore. You can get in touch with the Yesh, who can give you more information about it. Question from Madhav. Passenger vehicle is purchased for office. Can we take input tax credit? Answer is no. 17 subsection 5 clause A blocks the credit of passenger vehicle if the input tax credit, if the number of passengers or capacity is less than 13. All right. Okay, Bharti, is there anything else we need to address so before we close the session? All right. So there being no other point, so we can conclude the session for the day. I thank each one of you for joining with us today. And any questions that are still unresolved, please reach to the support@GSTZen.in. The support team will be able to help you. And if you have any doubts on it, you can put the questions even on the YouTube, and our support team will be able to support you. Thank you, everyone.